So your difficulty is actually deciding on the psychological levels on different pairs, because you're getting a little bit confused you can use thinking you can use the same psychological level, let's say on Euro USD, and you to use, let's say, on NZD USD, and maybe use the same level on GBP USD. So that's where your confusion is coming from, right? All right, cool.
Yeah.
So I'm going to share my screen. All right, tell me, can you see my screen?
Yes, I can.
All right, cool. I'm just going to clean this. So give me a pair you want us to work with real quick.
We can start with Euro USD.
All right, Euro USD. All right, perfect. So here's Euro USD. This is the hourly time frame. So if you're getting very confused with the psychological levels on how to use these levels on different pairs, you need to understand something first. So I'm going to put this on the daily time frame, so that this is our highest time frame we're looking at right here. So the first thing is, psychological levels are just round numbers, and these round numbers, it's understood or it's believed that once price gets to these round numbers, there's a reaction. So Euro USD is a pair on its own, it's different from GBP USD. So the price at which you see, so for example, Euro USD now, price is currently sat at about, when you look at this, 1.036. So when you look at this scale right here, it's completely different if I put another pair, for example. So I'm going to put the pairs, I'm going to put another pair. So let's do something like this. And I'll do another pair side by side, okay? And we can see. So look at this right here. I'll clean this. So let's put here Euro USD on one side, and then we'll put on this side GBP USD. All right, cool. So on this side, you have Euro USD, correct? You have Euro USD here, and on this side, you have GBP USD. So just looking at this axis right here, on GBP USD, price is currently at 1.23901. On Euro USD, price is currently at 1.03610, correct?
Correct.
Now, if you look at this axis right here, the way the scale is, price is moving differently, so there are different numbers. So this tells you already, if you're picking psychological levels, it's going to be different. The numbers cannot be the same. So you cannot use the same psychological level on GBP USD and use the same level on Euro USD. So every level you pick has to be dependent on the pair and sometimes the time frames you're looking at as well. So the pair decides the levels for you. So you cannot use 1 point. Let's say you have 1.000. You cannot just say, okay, because 1.000 is a psychological level, I'm going to look for 1.000 on Euro USD, and at the same time, I'm going to look for 1.00 on GBP USD. You can do something like this. So the pair determines the psychological level for you. So now let's put the psychological levels for GBP USD, and then we'll come and put the same psychological levels for Euro USD, and then we'll do a comparison and see. So sometimes it might align, but you never know, but we have to do it. But you have to do it separately. So each pair has its own level. So I'll clean this, and we'll start, for example, with GBP USD. So I'm just going to make this bigger right here. So this is GU, and we're looking at this on the daily time frame. So my first principle, when I'm doing like my psychological levels again, I always hide this like the chart. So the reason I hide the chart is because I don't want to be influenced by where price is reacting from. So I want to plot these levels without seeing what price has been doing. You get? All right, cool. So now that the chart is hidden, like everything is hidden, you can't see anything. You can start by putting a random number. So let's put, you know what? Let's do a random number right here. So this right here. So this is set currently at 1.50079. So I'll make it completely even. So let's extend this all the way to the back. I'll make this completely even. So I'll put this at 1000, for example. So your first level is just like, you really don't know what you're looking for. You understand?
Yes.
You mean? All right, cool. So your first level, like, you don't know what you're really looking for. You don't know what you probably see. So you start by plotting in this level. So hold on, that was 1 point, that was too low. Let's do 10,000, 1.5. Let's do something like this. All right, cool. So that's your first level right there. So that's a round number, right? 1.5000. So 1.50,000. Yeah.
Okay.
All right, cool.
Yeah.
So that's your first level right there. Completely easy. Now, if I ask you, what is it? Give me another level above this and one below this.
Can we do 1.4 and 1.6?
Okay, hold on. So you want us to do, so I'm going to take this. Let's do which? 1.6?
Yeah, 1.6.
Okay, that's 1.6. Give me one below.
1.4.
1.4. All right, cool. I hope I'm correct. All right, cool. So that's 1.6 and 1.4. So notice what we did here. The first thing, you just put a random number, right? You put a random number, which is a whole number, for example. And once you start plotting these levels, what you're trying to do at this point, you're just investigating to see if these levels make sense on this pair. Now, I'm starting here on the daily time frame because the daily time frame is my highest time frame. And that's where I want to plot my psychological levels. And then I'll use these levels all the way down to like the hourly time frame where I get my entries from, or my confirmations to get my entries. So 1,500, 1,600 and stuff like that. So if I bring the charts back in like this, so this is what you're seeing right here. So now you have the chart in like this, right?
Yeah.
All right, cool. So you have your chart like this. So the question is, once you have your psychological levels, there's certain things you want to pay attention to. So what's the first thing you pay attention to? You pay attention to the time frame you're plotting your psychological levels on. In my situation, I'm plotting the psychological levels on what time frame? The daily time frame. And why the daily time frame? Because that's my biggest time frame. Now, once I have my psychological levels, the next thing I'm looking for is some price action. I want to see some price action between the psychological levels. Why do I need to see price action between the psychological levels? Because it tells me if price is making a lower low, lower high from one psychological level, or price is making higher highs, higher lows from one psychological level to the next. So if you have price making lower lows, lower highs from one psych level to the next, it tells you price is trending like to the downside. So it's easy for you to do like a continuation or to hop in once you see the sales coming in already, right?
Right.
And if price is moving to the upside, making higher highs and higher lows from one level to the next, it makes it completely easy for you to see the pullbacks coming in. Then you can take your trades off of those pullbacks, correct? So pay attention to the time frame. Personally, I use the daily time frame, like the highest time frame, and then I start scaling down to lower time frames. I'm looking for price action between the levels. So if you clean this, and I'll just go now here and I'll show you. I'll go here and I'll show you right here. All right, so let's add a couple of psych levels above this one. So let's see. So let's put one more. I'll hide this chart again. Let's just do it real quick. So let's put this right here. That's 1.6. So obviously we're going to put 70,000 right here. And you can put 80. I just want us to have multiple levels we're looking at.
Okay.
Right here. Cool. And I can do another one below as well.
Sure.
So we have multiple levels on the chart. So now if you bring your chart again, now what you're looking for, you're asking yourself a question. Is it possible for you to see on the daily time frame, for example, can you see the price action from one level to the next?
Yeah.
Can you? So you're seeing prices making higher highs and higher lows, higher highs and higher lows. So that looks like an uptrend, correct?
Yeah, an uptrend.
So it's easy now for you to, let's say, hop in once you see price pulling back. Once you see price pulling back. Now, personally, Once you have something like this, so I like using this tool right here. It's called the dead range tool to see how long price takes to travel from one level to the next. So this area, that is 76 days. Price took about 42 days for this. And from here, price was taken. So price got, it didn't really touch this area, but that's it. And then you had to move to the downside. You're looking at this, price took about 71 days. So you're looking at this on your daily time frame, and you kind of understand what price is trying to do, correct? Or how
Right.
long it's taken for price to travel from one level to the next. Now just looking at this, I'm going to modify these levels again because I'm not really comfortable with the price action from one level to the next. So if you take this, so let's take this out. Look, I'll take this out again. So already I have an understanding, 70 days, this and that, 50 days for price to travel. So look at this. When you look from here, let me bring this drawing tool in. So you look from here, can you see? From here all the way to here. It's like you can't really see the movement like this. But this is what you're looking for between the levels. You want to see it doing the higher highs and higher lows perfectly. Right? So
Right.
when you look at this one right here, I won't really like, I'm not comfortable saying this price has given me that structure I'm looking for. You get? And that's it, because if you look a little bit further, I'm gonna show you. If you look a little bit further, like around here, all you see is an impulse and you see price pulling back.
Okay.
And you just see price taking off. So let's edit this. So if I use 1500, this level right here, 1005, I'll take the next level as 2000, for example. So I'm going to use like 50,000, like the difference of 50,000 between the levels, correct? So now you're looking at this, the difference between 1.50, like 1.500 and 1.600 flat is about 10,000, correct? So I don't like this because I can't really see, it's difficult for me to see the price action between it. It's difficult. So if you look at this area right here to this area, it's difficult for me to read this movement, but I want to read that movement between the levels. So I'm going to use now 50,000 between the levels. So again, you can hide the charts and we'll come back and see what's happening. So you hide the chart. So if I want to use this, so I can take this level off, take this level right here, take it off, and maybe put this at about, let's see, yeah, let's say 2000, for example, 2.12. I hope I'm correct. All right, cool. So that's that level right there. So I can take this level off. So if we go 50,000 below this, what level are we looking at?
1.0.
All right, cool. So this will be my levels now on GBP USD. And I'll bring the charts back in. Does it make sense now?
Yeah, it does.
Can you see some price action now between the levels?
Yes.
So when you look at this, it's completely different, right? Compared to what you had before. You're looking at this move, there's a pullback, and there is a move, there's a pullback, there is this move, there's this pullback, there's that inability. So you can actually see how price is taking out this area, price is taking out this area, and price is coming back. So this right here is what you're looking for. Some price action, not just any price action. You're looking for price making higher highs and higher lows. So it's doing it progressively. So this right there, like that is clean. Now that is the kind of price action you want to work with. So when you're picking the levels, it's not okay for you to just pick levels randomly, but you need to do it. You need to do it properly. For example, correct? You need to do it properly.
Right.
Yeah. So this will be the levels I'll be looking at on GBP USD, for example. Now it's gonna take a lot of time for price to travel from, let's say, this level all the way to this level. But what this gives you is the ability to see the swing moves coming in. So what's an example of a swing move? You see from this area to this area, this right here is a swing move. Price pulls back, giving you another swing move, pull back, and for price to play, pull back, and for price to play. So the intention, once you're doing something like this, here's what I tell people all the time. When you look at price this way, it makes it completely easy because you can come in at any time and you have an overall direction, or you have this directional bias. So your directional bias like this is going to be stronger compared to somebody who is looking at minor structures. So just imagine you're looking at this on the daily time frame, and you know GBP USD had this difficulty to go through this area. And the way I talk about psychological levels, if you have this difficulty to go through one area, then you're expecting prices to travel to the next area. So if you have this already at the back of your mind, like you have this understanding, all right, this is what GBP USD has to do, an inability for prices to go below 1.50 flat, we're expecting prices to go all the way to 2.0 flat. So look at this, you have all this price action to play with to the upside. Now this is beautiful, and the reason I'm saying it's beautiful is because with every pullback that comes in, there's an opportunity for you to buy. With every pullback that comes in, there's an opportunity for you to buy. With every pullback that comes in, you have this opportunity to buy. So all these pullbacks, these are opportunities to buy like this. You have all, so you can buy here, you can buy here, you can buy here, you're buying here. You have a lot to do. Now, once you get your entries, so let's say you missed the buys here, but you was able to see the buys around an area like this. So let's say this is trade number 1 for you. So you've seen how this price is coming to the downside, right? There's an inability for price to make new lows. You see the price turning and moving to the upside. And let's say for some reason you was able to come in here and take your entries. Now, if you take your entries here and you have it at the back of your mind, this price is headed all the way to 2.0 flat. It becomes completely easy. Now, you might decide to hold this all the way to the upside, but that might be too difficult for you because it's going to take so much time, because that's the daily time frame, and every candle in the daily time frame takes 1 day to print. So it's going to take a lot of time for this move to happen. So what you can do is you start trading this on lower time frames, right? So on lower time frames, this piece of price action from here all the way to like here is going to look something different. It's going to look like this. Price is making higher highs, higher lows, higher highs, higher lows on lower time frames, up until the point where it gives you a violation. You see? Something like this. Okay. So you can continue this move again to the upside. So what you've seen here, like there's a pullback violation. I don't know if you've seen it properly.
Yeah, I can see it.
All right, cool. So what you've seen here as a pullback on a lower time frame is like a minor trend line violation, so prices can then deliver again to the daily time frame. So if you're trading this and you take your trade and you don't want to hold this trade all the way to this area, you can use a principle like this. As price starts moving up, making higher highs and higher lows, you're holding your positions in up until the point where you get a violation. Once you get a violation, let's say here, close those positions, and you wait for the next opportunity. You wait for these sellers to come back again, pulling back to like the daily time frame, and you rinse and repeat the same thing. Now you're looking for buys again off of an area like this to take it again to the upside. This piece of price action to this area is going to look again like this. Price making higher highs and higher lows, higher highs and higher lows, like this, up until the point where you get a violation on those lower time frames. Once you get a violation for the price to continue to move to the upside, you might decide to close your positions in.
Okay. And I have a question, like, do you, when drawing the trend lines, do you use the 1 hour, do you use the 4 hour?
Yeah, I have a video already on the channel that talks about trend lines and how to draw trend lines differently. I don't think you've seen that video already, but I have a video like I think it's almost like 40 minutes or an hour. Right. Now, psychological levels, I plot the levels from the daily time frame. But when I'm doing trend lines, as I'm moving from one time frame to the next, I'm doing the trend lines on every time frame. I'll show you an example. So let me clean this, right?
Okay.
Let's clean this and I'll explain something real quick. So I need a space like this. Cool. So let's say you have a movement like this on your, let's say this is your, look at this like your daily time frame. You have an impulse, you have a correction. You have an impulse, you have a correction. You have an impulse, you have a correction, and you have an impulse. So let's say this is what you're looking at on your daily time frame, right? So price is moving to the upside, giving you higher highs and higher lows like this. So you put your trend line on the daily time frame like this, for example. Okay. So you have your trend line like this on the daily time frame, for example. Now you need to understand the concept of trend lines as well. Once you have price moving from here, are you following?
Yes.
Price gives you a swing move. It gives you a swing move from this area to this area, then you get a pullback. Now notice how the pullback comes back to the trend line from the daily. This trend line right here. It comes back. So this, I've not drawn this to scale, so it's not touching like, hold on, I'm just gonna, let me edit this so it looks better. So let's put something like this. Cool. So this is what you're looking at. So you have a trend line on your daily time frame. So that's the first thing you do. And I think as I mentioned already, there's a video on this. So after this, go watch that video. Once you have this trend line, the lower time frame is going to deliver prices back to the higher time frame. So the swing move you're looking at right here, this swing move you're looking at is a trend on a lower time frame. So what you're expecting on a lower time frame is something like this. You're expecting price to move to the upside, pulling back, 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 and maybe an inability, and then it starts delivering back to the daily.
Okay.
You seen? So what you see on the daily time frame as a swing move, on a lower time frame, it's not just a swing move. On a lower time frame, what you're looking at is actually a trend on its own. So if you look at this piece of price action again, right here, price pulls back to an area like this, and then it takes off, giving you another swing move right here. As price gets to an area like this, you look at this again on the lower time frame, price must have given you this, maybe this, and price starts coming back to the downside. If you understand this piece like this, it makes everything completely easy. Not completely easy, but at least it gives you a 50% chance of survival. Just understanding how price is being delivered from one time frame to the next. So if you had to plot your trend lines on lower time frames, now let's take this piece right here, for example. Hold on. I'm gonna duplicate this. So let's take this piece right here and we'll work with it and make sure this stays back on the chart. So you're looking at this piece right here on the lower time frame, correct?
Correct.
On your lower time frame, this would be your trend line right here. You see how it plays?
Yeah.
So your daily is a swing move. So on the daily time frame, this move might be like, let's say 5 candles, like 5 solid candles, 5 solid daily candles going to the upside, and maybe 6, 7, 8 candles coming to the downside. And then you have another solid 6, 7, 8, 9 or 10 candles going to the upside, and then you get some other candles coming to the downside. So on the daily time frame, you're just seeing solid candles. On lower time frames, it's giving you higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And once you get a violation Once you get a violation right here on the lower time frame, it's going to give you lower lows, lower highs, lower lows and lower highs, lower lows and lower highs. But what this price is doing, it's simply delivering prices to this daily area right here, so you can buy again to the upside. So this piece right here is what you're seeing here as a swing move, and then the violation comes in right around here, price starts moving down. This is the piece right here. If you understand this, it becomes completely easy. Another thing you have to do is understand the markets you're trading. So if, for example, you're trading GBP USD or Euro USD, these pairs might be moving to the downside. So you flip everything I've just shown you and you look at it to the downside. But I want you to understand this concept because it's a very important concept. Like, it's basic. Like, this is something that is simple, but you need to understand how it plays. Now, once price starts moving to the upside, let's say during the swing move, and you get the violation, and for price to deliver to this area right here. So once you get a violation, and for prices to deliver to an area like this, there's certain setups you can start looking for to help you. Because personally, I'm very big on price patterns, so I pick patterns easily, so I can look at a chart and it's easy for me to recognize patterns as repeating itself over time. That's just what I'm good at, you see. So you need to pick your poison. So I'm good at looking at the charts and seeing patterns that repeat over time. So once I'm doing my analysis, I'm looking for patterns that repeat itself to give me the delivery to this time frame, so I can take the sales. That's one way to take trades. So you see, I'm looking for repeatable patterns to take the sales. I'm looking for these repeatable patterns around here to take these sales to the downside. If I don't see those patterns, I'm not taking those sales. So you're looking at this side level from here all the way to here. Now the story starts making sense. You have an overall trend, right? You have your overall trend. So you're looking at this trend right here. And that's why I tell you the price action between the psychological levels is vital. You need that price action between the psychological levels. That's the only way you can understand what's happening from a bigger time frame. And as you scale down to lower time frames, you know what you're looking for. So on lower time frames now, you start playing with this piece right here. You see?
Yeah.
On lower time frames, you're playing with this piece. This area right here giving you the swing move, the violation, delivering back to the daily. So you're taking this buys as the swing move is forming. You wait for the violation, you can take those sales, but there's a way to do it. It's not something I can show you now because it's very lengthy as well. Like, we'll be sat here for hours just going through, because it's like, once you get the violation, this happens. You wait for this. You wait for this test. You wait for this. So it's a little bit complex at that point. It's something that's gonna take time for me to start dissecting that piece right there. But I just want to show you this, like the basic, like surface level. This is what you're looking at. Now this is how you can start looking at prices. It's gonna make it completely easy for you. Completely easy. And look at this. So you have this piece right here. You have this piece right here. So this is what we're looking at. On a lower time frame, this is what you're looking at. Higher highs, higher lows, higher highs, higher lows. A violation of this on a lower time frame means price is delivering back to the daily, to the next time frame, which is higher. So a violation right here, you get a violation here, price delivers to an area like this. Once this comes in, you're looking for buys again. Now this is the mindset I want you to have. Correct?
Correct.
This is your mindset. On a lower time frame, you get a violation, price delivers to the higher time frame. I want you to do these buys and hold these buys for the next swing. That's if you're a swing trader, because that's what I do. As price gets the violation, it delivers again to the higher time frame. I take the buys and I hold these buys for the next swing move to an area like this. It gives me that violation. You wait for those sales to come in, or you can trade the sales. You look for the next buy and you hold for the next swing move. because your intention is to see prices headed to 1.50 flat. You see?
Yeah.
It's not complex. It's just how you read price, and this is like the basic. You learn the basics first. You can look at complex things later. You can start bringing in other concepts, different, like you can bring Fibonacci levels, you can bring liquidity graphs, you can bring smart money concepts. So you can just like you can bring many things in, but understanding how to read price, like just naked price action like this, is very vital.
Okay, so I have a question. When you're doing the pullbacks, like
Yeah.
when the market touches the trend line, so that you can take your buys up again.
Yeah.
Like what specific criteria do you look at? Like, do you look at the gas
No,
bill?
it's a whole setup I look at. It's not a specific thing. So that's something is that, as I tell you, is gonna take time, because before doing the buys here, right? I'm studying this entire price action from here as price starts buying. So let's say you're looking at this wave from here, correct?
Right.
You're looking at this wave. So once this buys come in and the violation starts coming in, it's like it's multiple, like there's just multiple layers. I'm looking at. It's complex to show you, man, because it's gonna take time. Because I have to start breaking down. It's like I have to then show you like my entry setup and everything. It's gonna take time, and we have just an hour to do this.
Okay, no pressure.
Yeah. So it's gonna take time, because then I have to start bringing in the chart. Because what you're looking for now, this is what you're looking for. You're looking for the reason why I'm buying here. I can't just show you the reason for buying here without explaining to you what happens once these sales are coming down. Because the reality is, you won't just see price dropping to the downside like this. It's going to give you a complex structure. So I'm going to show you something. So sometimes you see the price coming down. Hold on, I'm going to use something cleaner. Let's see. Let's do this. So sometimes you see a very clean structure. Yeah. Sometimes you see a structure like this. It's easy. And you see price moving to the upside, right? You've seen structures like this. Price just comes down and it moves to the upside. But then what happens if price does something else? So there's a possibility as well. You see price coming down. It starts going up. It comes down. Starts going up. And maybe slows back before taking out an area like this. Now that's a different structure, right? So I'm going to put this structure right here, and I'm going to put the first one I showed you. So you have something like this. This is the easiest one. Like this one is very easy. You just see price coming, and you see price moving to the upside. So your focus right now is, how do you get in? You see where your question is, how do you get in? How do you get in? That's not what you should focus on. That shouldn't be your primary focus. So what you need to pay attention to is how price delivers to the downside, because this structure right here is completely different from this structure. It then does something like this, slows down, and then it takes off. So if I show you, like, how do I explain to you like the entry here and the entry here? So this is like two different structures. I need time to show you how this is playing out and the reason behind it, why price would do something like this, why price would sell, do something like this, do this, come back slow, show you, and then show you other examples. So it's different. So this pullback, so once we have the pullbacks coming in, I have some, like my friends I'm working with, we're looking at these pullbacks. It comes in different variations. So the entry is like the last thing, and it's not really something you pay, like, the entry is not something we're paying much attention to. We're paying attention to the delivery, to the higher time frame. How is that price delivering? What structure is it giving you? Because that structure is then the setup. You see, so it's not just one thing. It's not like I'm looking for a 3-bar reversal, or I'm looking for a pullback to, like, let's say the 8% on the fib level. No, it's price can give you complex structures. So my system now is I have this as a basic, like this is the foundation thing. I can show you this, like this is the foundation thing. But looking at the structures within the pullbacks is the one, like that's the most complex thing.
Okay.
That's complex. You can't do it like in an hour because there's like 3 or 4. Let me see. I think I can, like there's 3 to 4 different structures we look at once we have in the pullbacks. But every piece of that tells you something. So why will price do something like this? Pop out, pause, sell, come back, pause before buying. So this on its own is a completely different thing. So now you need to explain each of these things and the variations you can see within these structures and how to attack it and how to trade it. So it's always difficult explaining my entry criteria just looking at it like this, and the time is not conducive as well. So what I want you to do, understand how to plot these levels first. Understand the mindset or the reason for looking at price between the levels that I'm showing you. So you're looking at major structures between the levels. You're looking at this impulse to the upside, price taking out this area. This is your highest time frame. You look at another impulse and you see price taking out this area. You look at another impulse and you see price taking out this area. So go practice this first. Forget about the entries. If you understand the way price moves, you can build your own entry model. So my entry model has nothing to do with the way your entry model can look like. We can have completely different entry models for the same price action moving to the upside. So your entry model might be different. You might bring in a fib tool. Let's say, what do I have the Fibonacci thing? So let's say you put a fib tool from here to an area like this, and this will give you, I think, 50 and 60 if I'm not mistaken. So you might look at it differently and say, I'm waiting for prices to pull back to this area, which is like the 50, and then an inability for prices to go below this area. I'm looking for buys. You see, that could be your entry model right there. It has nothing to do with the way I look at price. I don't use the fib level once I'm looking at prices. So if you do something like that, so hold on. If you do something like this, this is your entry model. You have a fib level right here. You're looking at this area. You're looking at this zone right here, and you're expecting prices to pull back to an area like this, so you can take the buys. That's, let's say, your first concept right there. And the next thing you're looking for, let's say, as price comes to an area like this, maybe you're looking for a fair value gap here. Price delivers to that fair value gap, and then now you're looking for buys off of an area like this. That could be your entry model right there. Now you go test it. Personally, I don't do something like this, you see? But then your entry model might be completely different from mine. But once you do the buys around an area like this, I might be doing the same buys, maybe coming in a little bit. Let's say maybe I take my buys around an area like this, but we've done the same thing. So we're looking at this impulse, we're looking at the correction, and we're looking at the move to the upside. So because of your entry model, you're getting your entries here. Because of my entry model, I'm getting my entries here. Now you need to know what model is best for you in terms of your risk to reward, your psychology, and the entry model needs to fit you. So I can get an entry model that gives me an entry here. Now this might be very risky because at this point you don't know if price is going to weak you out before moving again to the upside. So you need to understand what you're doing. You need to understand your personality on certain things. Then you build an entry model from that. Are you more conservative or you're more aggressive? So there's a lot that comes in with just how do you get the entries. Now there's a lot that comes in, you see. And sometimes when I show, let's say if you get the opportunity during later sessions and I have time to show you one of my entries, I don't expect you to copy and paste it. I expect you to copy, learn it, modify it, and make it suit you, and make it yours. Like, modify it over time, make it suit you the way you feel comfortable using it. You're not supposed to do it the same way. But bottom line is, you have a swing move right here, you have a pullback. You have a swing move right here, you have a pullback. You need to step down to lower time frames. and understand what's happening. And from your lower time frames, once you start seeing the price action on lower time frames, you can then come back to higher time frames and see the delivery on higher time frames. So the first thing, lower time frame violation, delivery to the higher time frame for you to take the next swing move. Lower time frame violation, delivery to the higher time frame, you take the next swing move. Now, here is something you can do. Take a pair like GBP USD, for example. If the pair is in an overall downtrend, you need to first of all determine all of those things and start looking at the swing moves. Just look at the swing moves. So every time price moves to the upside, for example, so every time price moves from this to this, just look at it. Just say, all right, cool. I see what you're doing on this time frame. All right, cool. I see what you're doing. You're pulling back. Nice, pulling back, and then put the chart side by side. Correct?
Right.
During this movement to the upside, this swing move to the upside, look at the price action within this movement. And once you get the violation right here, look at what happens. The thing with price is, the way I look at price, it repeats patterns a lot. Because it's like you have humans doing these transactions. Price is not just moving on its own. You have some human nature involved as well. And one thing that's for sure about you and I as human beings is we like something that's consistent. So when you're driving and you get in the car, you almost do the same thing every time without even knowing. You get in, take your seatbelt, start the engine, put your legs on the brake pedal, like without even knowing. So you're just doing these things repeatedly like that. And that's how I look at price. Once you've done something more like over and over again, you keep doing it. If it's working, you keep doing it, and your brain as well just looks at price and it's looking for those things. So I don't care what you show me on this chart. I will look for a swing move, I will look for a violation on a lower time frame, and I'll look for delivery on a higher time frame. And then within those deliveries, I'll start looking for my patterns like that. And people say patterns don't work, you can't just trade off of patterns. This is what works for me, and I'm going to stick to it. I'm not trying to switch it anytime soon. Yeah, so basic, that's it right there.
Okay, that's quite interesting. And so when you talked about scaling from probably from one swing low to swing high, do you put, like for this case, will you put your stop loss under 1,000, or will you put it immediately under the trend line?
Now, stop loss placement is something on its own. Just like the entries you asked me, your stop loss is not determined by psychological levels or trend lines, it's determined by price action. What's the, like, when you put a stop loss, when you just talk of stop loss like this, what's the reason? Like, have you ever sat and asked yourself, why do I even need a stop loss? The whole idea behind the stop loss is, this is how I look at it. Where am I wrong? You see, where does my trade become invalid? That's where I want my stop loss to be. That's one way to look at it. I'm looking at the point of invalid, like the point where it becomes invalid. So where is my trade becoming invalid? That's one thing. Another thing I'm looking for is protection. Where can I place my stop loss to get maximum protection? This depends on what price is doing. So look at this piece right here. As price is coming down, right?
Yeah.
As price is coming down, if you place your stop loss here, you protect it. You're looking at this in hindsight, you're protected, right?
Yeah.
Okay. If you did, let's say, as price came down, if you placed your stop loss here, you don't know because you see price wicked you out and went through. So let the price action show you, like let price show you where your stop loss is most protected. That's why when I place my stop loss, I don't care about the pip difference or like the pip range. Sometimes I might have a stop loss that's like 50 pips. Sometimes I have a stop loss that's 100 pips. Sometimes I have a stop loss that's 500 pips. It doesn't really matter to me because I'm going over percentages. So if I have a stop loss that's 500 pips, and then I know my return on this would probably be 1500. So I know I'm still doing 1:3.
Okay.
So I'm still doing 3% on that trade. That's it. So I don't really care about the stop loss going below the trend line, below the psych level. No. Where is the most protected place I can put my stop loss? Because you don't want to lose your money that you've put in the market. So you're placing your stop loss where you know if price weaks you at that point, first the setup looks invalid at that point. You see? That's one way to look at it when you're placing your stop loss. You're placing it at a point where if price takes you out, the setup looks invalid. The next thing, you're looking for that protective area where if you put your stop loss, you know price there's a high possibility. So if you put your stop loss here and this price starts moving, there's a high possibility this price will take off and continue moving to the upside. So putting it here, you're protected. When you swing trade, you're not really looking at the stop loss thing that way. You just need a good entry. Put your stop loss where you're protected. So look at this swing move. If this swing move has to give you 1:9, 1:10, you have some room to place your stop loss. There's no need for you to come and look for like very tight stop loss like this. So you're looking for these tight stop losses. No, don't do something like that. Put your stop loss where it gives your trade some room to breathe, and it just makes it easy for you to walk away once you take your positions. All you have to do is come and monitor, like see how price is moving. Maybe you decide to do break evens and things like that. Correct?
Correct.
Yeah. So this is how you plot the levels, and we've done this on GBP USD, but I believe with this explanation you can do the same thing on Euro USD. We don't have to go through Euro USD and stuff like that, but the concept is the same thing. Throw one level on the chart, let's say on the daily time frame, just throw a random level in. From that random level, do multiple, let's say 3 levels above, 3 levels below, and then bring the charts back in and see if there's some price action. That's the most important thing. You need price action between these levels, because the price action tells you, I've seen what price is doing. So price is traveling from the downside to an area like this, an inability of a price to go through this area. So if you see this inability of a price to go through this area, what do you think price is most likely going to do? Start moving again to the downside. Just common sense. So an inability for price to go through one level, it starts moving again to the downside. Common sense. So all you have to do then is flip the coin again. If you was buying, now you're looking for possibilities to sell. You see, but you need to pay attention. So let me show you something now. This is very important. Yeah. This just came like, all right, look at this. Look at this. I just said something that I might throw you off, and it might make you go do something and start losing money. And you're like, hey, this guy says something. And look at this. Price is moving from one level to the next. An inability of a price to go through this level, and you see a violation coming in. So once you see this violation coming in, at the back of your mind, what are you thinking? Price is going to do this and start moving to the downside. Correct?
Yeah.
To the next psychological level. Now, every time you have a violation of a trend, the first thing you have to do is look at the time frame higher and ask yourself, is there a trend line from that time frame? You see what I did there?
Yeah.
Because if there's a trend line from a higher time frame, this violation you're seeing on the daily time frame might be a delivery to what time frame? Maybe the weekly or the monthly. So in a situation like this, you're not just selling crazily, you're not just taking sales and you're selling. Now you're asking yourself, maybe this is not going to hold completely. Maybe this price is just going to come back to an area like this, pull back, giving you the sales, pull back like this, giving you something like this to an area like this. So now you have a different game plan, and if this happens, you're expecting prices again to move to the next area right there. So you're not just going crazy, oh, we've had a violation of a trend, now price is just going to start moving to the next psychological level. Yes, price has to move to the next psychological level based on the principle of psychological levels. An inability of a price to go through one level it has to then travel to the next level, which is an area like this. Price is only going to do this if it gets to this area and there's an inability for price to move to the upside. You get another violation of this trend line. It's going to do it progressively. So let the price show you it's going to that level. Don't force it. If it violates from the monthly time frame, look at the next area right there. Look at the next area. If price keeps violating, you'll see price moving down progressively. So so the reason I'm saying this is simple. Look at this. The reason I'm saying this is simple. Once you get a violation of this trend line, so you had price moving to the upside. Once you get a violation right here, this area right here, you have, so this cells that you're seeing, price making this and this, everything you see right here is just a temporal thing. It's just a temporal pullback for you to see the major move coming back again. Because on your higher time frame, this might be something called a pivot point. So this area right here might be the pivot point. So once you combine all of this and price coming back here, on this time frame, you're getting ready for the next swing move. Now, as I tell you, there's other patterns I can look at that might tell me if there's an inability for this price to move to this psychological level, then you can anticipate the violation of that trend line. So it's all about understanding what price is doing, bringing your patterns in, and you play from there. So we've done almost an hour already. I hope you've learned something. Do you have any question up until this point?
Not really. Most of the questions I had, at least you've answered most of them.
Yeah, I want you to take it one step at a time. You can't learn everything in an hour. The reason I do these sessions is just so you get an understanding of the basic. And at least if you have the basic understanding to do something, then you can go and build upon. And if you have difficulties, you can always ask me. And if I have time, I'll come back on and try to help you. Yeah.